Hello, this is George Beyrouthi from FS Securities, a stockbroking firm here on the Gold Coast in Queensland, Australia. George would like to share with you a surgery that had to be done on Thursday the 31st of January at 1 p.m. Perhaps it's better to call it financial engineering because a trade that he did on the 25th of January was likely to end up to be very sick. Well, prior to Thursday, this is the trade that he entered. George entered the following position. He bought a put at 69, expiry the 7th of February. He sold the put at 70. He sold the call at 74. And he bought a call at 75, all of them expiring on the 7th of February. And provided CBA was at the end of the 7th of February, finishing between 70 and 74, a premium that clients received would end up to be profit in their pocket. We opened the 69 and 75 as safety measures should the market go below 70 or above 74. There is a range here where that will minimize the losses. So that is the range between 74 and 70. If CBA ended up between those two numbers, anywhere between those two numbers, as I mentioned, the premium will end up to be profit. This is the ratio of the reward over the risk. Because of the iron condor, this is a strategy where we take when we don't believe the market is likely to go higher by too much or going down by too much. Sometimes when we have seen a particular stock or market going up or down quite extensively, it usually sits in a particular small range without any high volatility. Well, we'll see, and that's the reason why we entered this particular position, because CBA was much higher than 72 before we entered the trade. So clients received $1,550. That is a premium that they received, less the fees that we charge as stockbroking, and provided 70 the call option with 50 contracts, and 70 also says 50 contracts. The premium of $1,550 less fees will end up to be the profit. However, at 1 p.m. on Thursday the 31st of January, we ended up having to do something very important and very urgent. CBA started to drop beyond our expectation. Where it was around 72.86 when we entered the trade, it started to fall, and we decided that it was time we take action. And this is the beauty about trading options. There are always positions that can be mitigated by closing the existing position and entering a new one. And I'm going to express with you and share with you what we did. So that was the original position. The 69.70 were actually the danger area. And just to remind you, we received $1,200 for the 70 that we sold. That's the put option. And we paid $775 for the put at 69 that we bought. So that ended up to be $425 less fees that we received for those two legs. So we decided we closed those two legs, and we ended up having to buy the 70 and sell the 69, and the cost of doing this was actually $1.21 less minus 83 cents. That's 38 cents times 5,000 because we have 50 contracts. 50 contracts, each contract is 100 shares. That ended up with $1,900 loss, plus of course fees. However, the 6 legs that we traded overall, if you put the profit that we make from those 2 legs here, the 74 and 75, and the premium that we received from the 69 and 70 minus the fees that we had to pay, we ended up in total of 350 total loss. That's of course gross before commissions. So these are the new position that we entered. That's the surgery or the financial engineering that we did. So as I mentioned, the 350 before fees was actually our loss. We decided to sell 70 contract at 72 and 70 contract at 74, keep the 75 opened, and of course because we already had 50 that we had already sold at 74, then we ended up having only 20 for the call option that we ended up buying. So we have 70 contract we sell at 72 and 70 between 74 and 75, and provided the market remains below 72, now we're talking in terms of calls, we're going to end up with 2,555 less fees. Overall, we think that, if that happens, after all the fees that we will charge, the client most likely will end up with about $1,500 net profit after all fees. This is another position for other clients that we took, when now we've taken the 72 also on the high end, and now the 68 instead of 70 on the bottom side. And provided CBA remains between 72 and 68, this coming Thursday, clients will be receiving $1,200, $1,200 before commissions. Now, of course, we made this presentation and we have a proviso that before you take any action, you need to actually consult with us or talk to your professional advisor. So this is our disclaimer. We don't know your financial circumstances, and of course positions don't always end up in profit, so you have to be careful. So overall, have a good day, and let's wait and see what happens with CBA.